Good afternoon, everybody. Today is Tuesday, November 11th, Veterans Day. Thank you to all of our veterans for the sacrifices that they've made. I'm an associate member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I'm out of TQQQ that I had gotten back into yesterday. I'm out of NVIDIA that I had gotten into yesterday. Those were just shorter trades. I do still have some SMH on, but I reduced that position. So some quicker shorts there, which is kind of where my head's been at recently, you know, taking some quicker trades while we wait for the bigger picture to play out here over the course of the next couple months. It was a very, very boring day today, so we could potentially do a pretty quick afternoon meeting, but of course, if people have questions or they want to catch up on anything, it's a good time for questions because there's not a lot to talk about. SPY's finished up 0.25%, Q's finished down 0.17%, IWM was very flat, TLT's up 0.4%, the dollar's down small but off of lows. Notably, crypto down. I thought that non-profitable tech traded poorly. Crypto traded poorly. This Bitcoin ETF chart looks pretty bad. Ethereum looks pretty bad, down 3.5%. The Solana chart, I think, looks the worst. It's down 6.4% today. So, you know, they're taking crypto to the woodshed. Yeah, AMD ripping after hours here. Their CFO is speaking. I don't know what the CFO is saying, but AMD getting an uptick. So maybe that's what'll save the market tomorrow, because every day something saves the market. Today it was Apple. So, you know, pretty strong day today. The question for today's trading session that I had in the morning meeting has now been answered. And that question was basically, now that we don't have the vol control bid today, right? The vol control bid, I think, really saved this market 2 trading sessions ago and helped give continuation yesterday, combined with the ETF rebalance flow. We didn't really have either of those flows today. And if anything, the risk on the systematics, once again, there's asymmetric risk to the downside if it can never get triggered. You know, a lot of other bullish flows that are out there, though, so I wouldn't necessarily just be bearish right now simply because of that as we get into all this bullish seasonality. But the question of the day was, without, you know, the bigger ETF rebalance like we had yesterday, without the vol control bid that we were scheduled for yesterday, can the SPYs maintain a bit above 680 today? And if the answer to that is yes, then as far as I'm concerned, the technicals have resumed to full-on bullishness. And the answer at the end of the day here is yes. So technicals are looking great. 674, I think, is still important on the downside, so we can keep that level in mind. But we are back into full-on bull mode here when you're looking at the S&P 500. It looks great. And when you just understand these trading dynamics into the end of the year, in my opinion, there's no reason not to think that we can have this market continue higher unless you really see the AI trade fall out of bed. I think it's the only way that we don't go higher into the end of the year. The only way that we could go lower into the end of the year is if the AI trade falls out of bed. But I'm not predicting that. I'm just leaving that open as a possibility. Otherwise, it looks like we are scheduled to have our bullish November seasonality now, our Santa Claus rally after that, and we'll keep an eye on just how far this market can potentially stretch higher. I don't think it's going to be a dramatic upside event over the course of November, December. I could be wrong about that, but a grind up or, you know, sideways to up, I think makes a lot of sense into the end of the year. And we're starting to get technical confirmation there in the SPYs. The Qs aren't fully confirming it, I don't think. They gave an inside day today, so there is a chance. You know, someone mentioned in the VTF, like, could the Qs off of yesterday, could that be a lower high on the daily chart? And it could be. I think it's too early to predict that. You need to see an inside and down. So today's inside day, if we lose today's low tomorrow, then yeah, maybe you actually are looking at a lower high for the Qs, which would give us some mixed signals depending on what the SPYs are doing, if the SPYs are still above 680 or not. And you know, the IWM improved, but this chart is sloppy. The The RSP really seemed like it led us higher today. So notable strength in RSP. It seemed like semiconductors were where the weakness generally was. So semiconductors generally fairly weak here, though AMD's up after hours. And that's really all that I've got. You know, we were looking at NVIDIA short today, Oracle short today, AMD short today, but AMD had the event. We were looking for SanDisk to see if it could give an RDR. It closed on highs. Granted, WDC was a little bit weaker with an upside tail. What did the Real end up doing? Yeah, we looked at this Real. We called this out in the morning meeting for a long. So that traded great if anybody caught it. And I was trying to press this MBIS further to the downside. No, sorry, not MBIS. RGTI further to the downside through 31, but I never really got any follow through. I did increase my position and increase my target to 25, but it's nothing too dramatic. And I added a little bit on my Tesla short today also, just with the earlier weakness and holding below 440. Though now it closed at 440, and obviously if the market continues, it'll probably push Tesla higher. So that's really all I've got. It was honestly a very boring trading session intraday. I kind of felt that once we got to 10, 15 to 11 o'clock, like I just felt like there was no real edge in this market. We did end up catching a bid and grinding higher and recapturing at 680, but it was a quiet day, and that's to be expected when the bond market is closed. So, bond market was closed and just not, and just not a lot going on otherwise. So that's all I got. Happy to turn it over to you guys for any questions. LFS is running after hours. Oh, wow. Why not? OKLO, I guess, is out, but not moving or mattering. OKLO is down a little bit. Yeah, it seems like the big fireworks right now are in this AMD after hours. Varun just saying meta question mark. I don't really know what the question actually is, or if you just want me to review it. I like meta to the short side, but just not at this price, is what I'll continue to say. Inside day here for meta. I want that 80 EMA to catch up a little bit further, the 21 EMA to catch up a little bit further, or the stock to bounce a little bit more, and then I would look for a short. So I've been saying I like this as a short in the 640 to 660 area. This is not a name I want to be long. I understand that the whole reason why I'm looking for a short in the 640 area to 660 area, not where it is currently, is because of the possibility of an oversold bounce. So you could try to trade this for an oversold bounce, but there's just other things out there that I think are much better looking to the long side than this, even if it gives that bounce, something I want to short into. From Robert, when I'm reading the CTA flows, what does it exactly mean flat up down when the S&P is at 0% positive or negative for a day? They automatically start to trigger those flows. No. So so the answer to your question is definitely a little bit nuanced, but broadly speaking, the way I think they're modeling that is based on standard deviations of some sort of a move. And you can look at some of the research that's in there. Like they put a chart in some of the research. I think I posted it at some point in the VTF this morning, where they chart out the expected path of CTA flows in that up, down, or sideways tape. And they say in that up is, I don't think it's just one standard deviation. It might be 2 or 1.5, but it's like in an up move that is, and I don't know exactly how they quantify what a standard deviation is, but in an up move that's like, again, you got to look it up because I'm not exactly sure what the number is. I don't want to give you misinformation, but it's like in a 2 standard deviation up move. I'll just use 2 as the number. I'm not sure what it is. Then that counts as the up tape, where you should expect those flows. In a 2 standard deviation down tape, that counts as the down tape, and that's where you should expect that flow. And everything else is going to be roughly in the middle, roughly in the flat category. So it's definitely not like, it's definitely not as simple as the market's up 0.2% today, so therefore that counts as up tape flow, or it's down 0.2% today, so it counts as down tape flow. It's a little bit bigger than that. I think on the downside, when they give the triggers, I think that's going to be roughly in line with like what a down tape would be. If you get to that first trigger, maybe I think that roughly counts for this is where we are entering into down tape mode, where the selling actually begins. So, not a perfect answer because I don't perfectly know it, but again, you can dive into the fine print in that research that gets posted, and it'll certainly give you a little bit more information there. LUMN? No. Yeah, they smoked this thing through support and back down. I really don't follow this stock. It's come up, this is a name that's been around for a long time. Yeah, this name's been around forever. So I'm definitely familiar with it, and I've always been familiar with it at significantly higher prices than this. But it was recovering and building out a bull flag, and it looks like you got bull flag failure in this. It's now an AI fiber optic play. Okay. I don't remember what they used to be. From Uvixi Bull, standard deviation can be roughly calculated by call option price plus put option price for the duration that you're talking about. Okay, great information. There you go. Certain earnings play next week. Weekly options chain, yes, is one standard deviation. Perfect. Is OKLO popping on earnings now? Yeah, snapping up a little bit. I mean, they sold it down first. Now they're just snapping it up a little bit. From Tate, could the government reopening trigger a buy the rumor, sell the news event, or is it already priced in? I don't expect it's going to be that way for that type of an event. I don't think so. I think that the buying happened already, so I think that's priced in. I think that the buying from the government reopening is roughly priced in, but I don't think that I don't think that it's a sell the news event. I think that the government reopening, I don't necessarily think it's going to give a further bid, but it actually could. Just because there's all of a sudden there's going to be a lot of money flowing from the federal government that wasn't already, and that money flowing in, boosts the economy back, lines the pockets of people who aren't getting paid, makes it so they don't need to sell stock in the same way, or they can rebuy stock or whatever. So I don't think that that's a buy the rumor, sell the news event. The question is it a buy the rumor, buy the news event, in my opinion. And I don't think it is, but those government flows could be pretty strong from a reopening perspective. Well, that money's just been sitting there ready to go out, AMD sees EPS of more than $20 the next 3 to 5 years. Okay. So AMD up a little bit. Formula 147.2 in the YouTube wants to know my thoughts on Rivian. So I've only watched this Rivian peripherally. I definitely saw it moving today. I'm not fully sure what triggered this. I think it was earnings back here, right? That gave this big day one. Then you had this nice little rest pattern, and now you're getting acceleration up off of that. So, it's a squeeze for sure. It's breaking out above some major daily levels. So I think it looks pretty good. I don't believe in chasing price, so I certainly wouldn't buy here after 2 really big days in a row. I'm not ready to short this, and I think it could potentially have some legs. And I think their cars are cool. So we'll see. It doesn't make it a good business, but I like the car. I'm not ready to look for a day 3 RDR short on this. Show me 5 days up in a row into the mid-20s, and then maybe I would consider an extension short in this. The long is too extended to chase as well, though. So, I hope that helps. If you're in it, I would hold it. I would trim and trail. Uh, yeah, Vincent. If you have the options data, you can get an options chain. You just have to pay for the options data, which means that therefore you're able to trade options with T3. Back over to the YouTube. Do you have any recommendations for getting tilted intraday? Sure. Sure. So emotional control was always my biggest weakness as a trader for most of my career. I had to work really, really, really hard to conquer that. And I am definitely not perfect to this day. I definitely have days where I kind of get pretty upset. I would say that the biggest advance that I've made as a trader from a trading psychology perspective over the course of my career is not that I don't go on tilt. It's not that I don't lose control of my emotions. Those things still happen. It's that I don't act on it. So, a few things on that. So first of all, really important when you're trying to figure out like all right, so we all understand that going on tilt and making trading executions while you're angry or upset or whatever is bad and leads to probably worse P&L. I think that that's kind of a given that everyone understands. So the first thing that you want to figure out is, generally speaking, what are the things that get you mad? What are the things that put you on tilt? Because it's not the same for everybody. Like for me, it's never necessarily been P&L based. I'm probably more apt to get upset if my P&L is really bad than if it's really good. But I've had days where I've had phenomenal P&L and something happened and I've lost my mind, even on great P&L. And I have plenty of days where I'm down a lot of money and I'm cheerful and I'm not upset and I'm not angry about it at all. So the first thing you need to do is try to get a really good understanding of what puts you on tilt. Is it P&L? Is it something else? Is it that you got shaken out of a trade? For me, a big thing back when I was a hyper scalper, 10 plus years ago, was through prints on the tape stopping me out would send me into a wild rage. So if you can identify the things that put you on tilt, then you're going to be better able to recognize those things before they happen and as they happen, and therefore have a better understanding of what's happening and a lower probability of acting on it. And the best way to work on understanding what puts you on tilt, I think, is by having good journals. So journal not just what happens in your trades, but journal your emotions around those trades. And if you had a day where you went on tilt, then you should especially do that. So the next step for me after that was, once I was able to really kind of define what the things were that would make me lose my mind, was that I kind of did this thing for a long time where if I saw that I was like either on tilt already or getting one of those things were happening that triggers me, I would, and this is back when we were going to T3's office 5 days a week, I would take the elevator downstairs and I would do a loop walk around One State Street Plaza and the building next to it. There's two buildings right there next to each other. It's a short walk right by the Staten Island Ferry. I would do one loop around it, calm myself down, and then I would go back upstairs and trade. Tell myself it's just a stock, it's just P&L, whatever it is. So, first is figuring out the things that put you on tilt so you can try to recognize them earlier. And second is having a plan for when that actually occurs. And that was my plan. And then third is the thing that I always turn back to is, and this is how I personally feel that even though I still lose control of my emotions at times and I get upset, I don't act on it, is because I'm such a believer in my game plans. I really feel like the best counter to almost any bad trading psychology is by having really good game plans and then just making sure that you follow them. Because then it doesn't matter how tired you are or how angry you are or how happy you are or anything like that. You just know, hey, I've got this game plan. I've got to get the orders in per the game plan, and you just get the orders in per the game plan, and that's it. So those are my recommendations, and I hope that helps. Varun is saying, and I assume this is what the link is to, from Jesse Livermore. Are you trading or gambling? Jesse Livermore's 3 psychological tests to know the difference. Thank you, Varun. No problem. From Joel, I know the story hasn't really been broadening out or the IWM this year, but do you think the IWM is super bullish if it can really break the 2021 high that seems that it keeps getting rejected at? Sure, let's take a look at the IWM with that high, and I do think we had made an all-time high this year. We got a little bit above that, but we've kind of come back down, right? Yeah, so it's still battling that area. It's still battling that area. It's at like 245 or so. So we're right at it. So right at that. It kind of looks like that 245 has been an inflection point here for the last month or so. I don't know. I don't really have strong conviction on this one. My problem with the mid caps and the small caps right now is that I think that they tend to, this probably isn't perfectly true, but they tend to be more in line with the real economy than Mag 7 or AI trades or anything like that. And I've got a fairly bearish outlook on the real economy, and I think it's being propped up by the fact that the stock market's sitting at all-time highs. So it's kind of like my more qualitative, fundamental viewpoint on the IWM. From a technical perspective, if this thing can really get above the 245 to 250 area, it looks great and it looks ready for continuation. So I would take that as you will. The day when he came out with the, Joel here saying, real ones remember Derrick getting tilted during the Liberation Day candle. You mean the down move, not the up move day. Not when he tacoed on it, but the day that he came out with that stupid piece of construction paper or whatever the hell it was that had those made up numbers on it. Yeah, I was really pissed that day, especially because of the Wall Street Journal. Especially because the Wall Street Journal giving us that false information first that actually stopped me out of my Tesla short right before the down move occurred. So then I had no short exposure at all. I was 100% long, so I stopped myself out based on what we saw, and then they were wrong. I was pretty upset. Yeah, so Joel here saying in the YouTube, and this is a comment that I really much agree with, one thing that I really hate about the IWM is that it's got all the meme stocks in it. And yeah, I think so too. Because the area that I'm most bearish on right now with the market, and as I just discussed, I'm generally not bearish right now because of what the spies look like and the seasonality and the timing of the year and the corporate buyback. I'm not bearish. I'm like short-term bullish, really. But the one area that I am pretty bearish on still is these pre-revenue companies. I don't like how these charts look. You look at the quantum stocks, you look at the crypto. I don't like how those charts look, and obviously they make no sense fundamentally. You know, maybe one or two of them comes around and saves the world or whatever, but most of them are going to end up being zeros. Most of those quantum stocks are going to end up being zeros. Maybe not all of them, but most of them, I think. From Tate, how did you prevent tilt after SVB? So for anybody that's newer, when Silicon Valley Bank had that issue and there was a run on the bank and they went into receivership and all that stuff, which was so unnecessary, by the way. I still say to this day that they did not need to do that with SVB. They could have easily saved that bank. They had enough cash on hand. It was like it was almost like they forced them out of business. I still really think that. But I was on the day that it was selling down on the Friday in the pre-market. I was trying to scalp a position long. Like it was like a 5 minute. It was pre-market, but it was still like it was like a 5 minute capitulation setup of some sort. And I was coming in and I was like risking a couple $1,000, make a few $1,000. Like it was like a not a huge trade for me. And then you think you have a stop loss. You can't have stop losses at pre-market, but I had a mental stop loss where I'll lose a couple $1,000. And as I was in the trade, it was actually, I'm pretty sure I was green in the trade, and I was getting close to a fill. And I was just about to get filled on the offer, didn't even get the fill. And then they halted it. It was trading at like $44, and they never reopened it again. So the question is, how did I prevent going on tilt after that? Well, I spent most of the day in limbo, right, not knowing if they were going to reopen it that day or where they were going to reopen it. So there was nothing to really be on tilt during the day. And then the information was slowly coming out over the weekend and stuff that they were probably never going to reopen it. So it was almost like I didn't have the opportunity to go on tilt just because of the way the halt worked, to be honest. But again, I'm not necessarily triggered by P&L. So some things that I just kind of accept it. It just is what it is. Like that SVB, it just is what it is. It sucks. I still think to this day it was bullshit. That bank did not need to go under. I think the whole thing was a scam and who picked it up? Was it JP Morgan that picked it up for pennies on the dollar? There was so much more value in that company than where they bought it for pennies on the dollar after that. But, whatever is what it is. From Vincent, when do you usually start looking for entries when the market opens? So when do I start looking for entries? I would say that I don't have a direct answer to this question, but the open period of time is typically when I'm most interested in doing that. I most of the pre-market trading that I do is management of positions that I'm already in. Like if I have a game plan that says I'm supposed to buy stock or sell stock at a certain price, I really don't care what time it is. I don't care if it's 5 o'clock in the morning, noon, or 5 o'clock in the evening. If a stock is trading at a price where I'm supposed to buy or sell per my game plan, I buy or sell the stock per my game plan. So most of what I'm doing pre-market trading-wise is swing management per my pre-established game plans. As far as new positions go, I will put on new positions pre-market, but usually I'm doing that as more of a feeler with the idea that I'm going to look to get heavier kind of at the open. So I definitely don't do the 15 minutes after the open thing. I know some people do. From my understanding and from statistics that I've looked at and from an understanding of my own trading and traders that have been underneath me, experienced traders, a lot of times, a lot of their best P&L comes from executions that they're doing between 9:30 and 10 a.m. New traders are usually losing money between 9:30 and 10, and their best period of time is usually between 10 and 11. Why? I don't think that new traders are good enough yet at handling the speed, the less liquidity, and the wider spreads of the price action that's happening directly at the open. But price action is still good enough between 10 and 11. You're still getting good movement that those newer traders can take advantage of the fact that there's still good movement, but it's not so insane like it is at the open or illiquid like it can be at the open as well. So it's something to think about if you're a newer trader versus a more experienced trader. If you're a newer trader and you're struggling at the open, that's actually fairly common for brand new traders. Starting at 10 o'clock, they tend to do a lot better. Jim saying, I rarely ever trade right off the open, and I know that you're very active then. Are you primarily fading moves since most breaks fail? So what I tend to be doing at the open, honestly, so first of all, because the tape is moving so rapidly at that time, I get like just a boatload of executions on my pre-existing trades that I have game plans for, and I'm trying to keep up with them. So honestly, that's a big part of it, is just I already have these trades on and they're moving so rapidly. I'm just getting like so many fills happening in so many names all at the same time, and I need to keep up with getting in the opposing order and everything else, and that can be difficult. Beyond that, if I'm doing something, it's either gap fading or breakout buying at the open. Um, uh, with the gap fading concept, uh, we get those big gaps. I like to look for, like, if it's a big gap up, let's just say, an opening high to be short versus, or a big gap down, an opening low to be long versus. Sometimes that is the first 5-minute bar is high or low. Sometimes you get, continuation in the direction of the gap for... I find that you rarely get continuation in the direction of the gap for like one bar and then the second bar fails. Usually if you get continuation in the gap, you got to be looking for at least the third 5-minute bar for there to be a pivot high and for you to trade against it, or later, or sometimes it could be, a big squeeze can go on for even longer than 15 minutes. It can go on for as much as 30. Or it's happening the second the market opened. The second the market opened, they're fading the gap. And that can be something that you want to recognize and trade versus that high or that low to participate in that fade. Or traditionally, I don't do it as much now, mainly because I just get so caught up, honestly, managing my swings at the open. But I used to love when a daily chart breakout would occur within the first 5 minutes. Because the things that I was just talking about where the newer trader tends to fumble, can make for just phenomenal risk-reward opportunities. Not all the time, not necessarily super often, but like when you get that stock that opens up like just below the breakout level, and within 3 minutes of the open, it's breaking through it. The volume is coming in, but there's not a lot of liquidity, and the spreads are a little bit wider, and it's moving super, super rapidly. You can sometimes get like phenomenal risk reward on breakouts when they open up right at the breakout level, right at the open. If you're prepared for it and you're very fast on the keys and you get the stock, that's the situation where you can sometimes get in these breakouts for like 10 cents of risk versus the opening low in the first 3 minutes with the breakout, but instantly be $1.50 in the money within 5 minutes. Like that's a trade that I've always absolutely loved. Yeah, what Tate just said I think is true, that we get these bigger movements on the market on opens now, starting at 9.25. I don't remember that ever happening until very recently, within the last like year or so, like one to 2 years maybe. I'm not exactly sure when that started, but yeah. So I guess we don't see that trade as much anymore, and it has to do a little bit with these bigger MOO moves that we sometimes get. Because I do. It's annoying actually, because the morning meeting. We oftentimes barely have enough time to get through the morning meeting. So we're trying to finish it up, and we're going until 9:28. And, all of a sudden at 9:25, the MOOs hit, and I'm getting all these fills on swing positions that I need to manage, and, like, all of a sudden I, like, can't finish the morning meeting, or it becomes difficult for me because we're getting all those fills. Josh saying, I would love to actually see the stats, but on a large gap up on no news, I would argue almost 90% of the time, there's a point when we are below the starting point of the gap. The trick becomes how much of the gap is filled. Is it a full reversal, or do we get a little dip into the gap and then go? Yes, I agree with that. And it's about, finding the execution to be short or long versus depending on the direction of the gap. And I think I know how you measure that. You measure that off of the equilibrium area on your 5 and to some degree 15-minute charts. And it's that same game plan that I'm always talking about all right, let's measure the opening move here versus equilibrium. Let's see when we're not extended anymore. Let's establish our, opening kind of range, if you will, after the gap. And then if we're able to break highs or break lows after that, it becomes the signal of more real buying or real selling for then you're going to go to the upside, or then you're going to work on a full gap fill on a failure. That's interesting. Yeah, the 24-hour trading thing is becoming real, but it tends to settle down, I think, by the open. It's just crazy, which I wish Yahoo Finance wasn't doing this because I don't want to know. But if you type up a symbol on Yahoo Finance now at like 9 p.m., they're telling you where it's trading on the 24-hour session. And I've seen sometimes some of these crazy stocks, like these crazy meme stocks and stuff, they're just giving obscene moves late at night, probably because there's zero liquidity and just a handful of retail traders on Robinhood or whatever getting access to that, and all of a sudden these things are at these just obscene prices. But I find that they never end up settling there. They end up settling back towards something that's more realistic by the next 4 a.m. session. So maybe there's even an advantage there for people who can access the 24-hour blue sky, whatever it's called, equity market, where you can just be fading all those moves all the time, and then they're opening up at regular prices. I'm sure every once in a while you could get burned if it's a real news event, but I see these crazy moves happen sometimes on Yahoo Finance, but again, by the next morning, it always seems like they're at a normal price. Thinker, Swim, Interactive Brokers, and Robinhood can do it all night. Yeah. Yeah, I know. I've spoken to Sterling about it. We've spoken to it. T3 has spoken about it as well. It looks like we're probably going to eventually have 24-hour equity trading here at T3. It's just there's a whole host of additional headaches that you guys probably don't think of that a firm like T3 has to go through if they're ever going to be able to offer that. Such as like swing positions, like starter day files. Like, you guys don't realize, like these trading softwares and prop reports, all that stuff. There's all this stuff that happens overnight that updates your prop reports, and it makes it so that 99.8% of the time your positions are correct in your Lightspeed or whatever trading software you're on the next morning. All this stuff has to happen each night, and if you're putting an execution on at 2 a.m. right when that stuff is happening, there's just a lot of difficult logistics that is behind that. And then there's also the risk aspect of it. Like, firms have to have potentially trade support employees and risk employees that are up all night paying attention to that stuff. So, it's really a pretty difficult endeavor to do that. Honestly, I could care less if they even ever get it going, because I don't know. My other concern, honestly, is like concern that I haven't voiced before. Is I see on Yahoo Finance, like I've said, some of these moves that are happening overnight, and I know that traders at T3 have positions in some of those names where, without having access to the overnight trading, by the next day they're fine. But if we had access to the overnight trading, their account is like blowing up at 10:30 at night. So then that's a whole nother can of worms about like risk reward, I guess, of even having swing positions on if there's a possibility of an extremely illiquid move triggering you to a point where you're getting a margin call or whatever, which normally would not occur because the market would just open up the next day at a price that's reasonable. So there's all types of issues with it, and I hope it doesn't happen, but it's going to happen. It's inevitable. Overnight fees are pretty high. I have no idea. All right. All right, I'm going to wrap it up. Hold on, I missed one in the YouTube here from Anarm. What do you think of the fact that both the Qs and the Spies rallied on declining volume on the daily in the past 3 days? That's not something I've ever really cared too much about. I pay attention to volume. I think that... So the way that I describe volume is confirmation, but it's not necessary for a move. So if I saw an up move and it was on really good confirming volume, I would note that as, oh, that's a good thing. There's confirming volume. That's confirming the move. But if there was a move that's not on confirming volume, I don't think that that's necessarily setting up a failure. So first of all, today's Veterans Day. Today's a holiday for a lot of people. You're going to get lower volume no matter what. And two, you know, there's been a couple entire years of my trading career where, I think like 2013, the S&P was up 33% on the year, and the whole way up, everyone was like, "Oh, this move can't be real because the volume's not confirming. The volume is so low," and we still were able to be up 33% on the year. So you don't need volume to have price action. Price action is what pays. But when you get the volume, it's confirming of price action. So if you're trading it, it can give you a little bit more conviction. That's how I would describe that. All right, guys, I'm going to wrap it up there. Have a great night. See you all tomorrow. And if you're in the YouTube, you know what to do. Give me